Hi, and welcome to the Money Tips No One Told You podcast, presented by First Pioneers Federal Credit Union. Here at First Pioneers, we're passionate about helping not only our members, but our community become financially successful. That success often starts with basic knowledge, things like knowing how different account types work, to understanding terminology, or even tips that make your life easier. The more you know, the more success you will have as you handle your money and your finances. Let's get started. Hi, I'm your host Heather, and today's episode is part of a series where we will be talking about answers to mortgage questions. You know, there are several things to consider before buying your first home, and I hear people say all the time that it just feels like a daunting task. And the whole idea just scares them too much to even try. But owning a home can actually be a really wonderful experience. And we don't want to see fear stop you from going after that dream. The truth is, home ownership is not for everyone. Like so many things in life, you have to consider what's best for you and your circumstances. But we want to make sure that fear is not the thing that's stopping you. So when you start the process of considering purchasing your first home, there are some things you may want to ask yourself. Things like, when am I looking to buy? Am I really ready to buy? Things like why you're looking to buy. Is it because you want more space? Is this an investment? Or maybe you're just tired of renting. Once you've answered those questions, now the next thing to look at is your finances. So, how do they look? How's your income? Is your income stable? And then a big one, do you have an emergency fund? Which is at least 3 months of your monthly expenses in a savings account. Now, most people recommend 3 months. Obviously, it could be more, but think of all your bills, your rent, your car note, your insurance. Do you have enough set aside to pay your bills for 3 months? If not, you may want to consider that as you get started in the process. Finally, one more question. What can you afford? When you look at your budget, what numbers fit? Let's say you're paying some kind of rent right now. That might be a good place to start to know what will fit in your budget. How much rent are you paying? Can you afford to pay more in that particular category, or do you need to pay less? Now, as you're considering that budget, I have a word of advice for you. Don't plan to have a mortgage for the full amount you can fit in your budget. You need wiggle room in a budget, because the reality is a lot of things besides your mortgage payment can change a budget. And many of those things are going to be out of your control. Think about now, we're in times of inflation, and even basic needs like groceries and gas can increase a lot. There's also things like medical bills, or an accident, or an injury. And what if your car insurance changes based on the type of car you own, or maybe you had a claim? Your electric bill may even fluctuate with the different seasons of the year. So, there are a lot of things that can change in your budget, and you never want to max your budget out. Okay, so now that you feel comfortable with how you can adjust your budget, next, let's check your credit. Because credit is actually a big piece of the home buying puzzle. So where do we start? Well, with your credit score. So how do you find your credit score? Well, there are 3 credit reporting agencies. They're called Equifax, Experian, and TransUnion. The thing you need to know about that is your score is going to vary depending on the agency reporting, because each one of those credit bureaus, they place a different emphasis on different things. So, what will most likely happen with your lender is that they will look at a score from each agency, and then they'll take the one that's in the middle, and that will be the score that they work with. So there are a few ways you can get your credit score really easily. You can get a full credit report from annualcreditreport.com. They offer you a free report once a year from all three of the reporting agencies. You can also purchase your credit score from FICO. Another way to get a credit score is maybe through your credit or loan statements. A lot of credit card companies will include your score on the statement that you get. That's the same for loan statements as well. The thing I want to say about that is pay close attention to the source of that score, because it's actually really normal to see a slight variance in your score depending on where you're getting it from. So just be aware of that. The good thing about these scores is they can be a great general guide to start with, but there are a lot of variables when it comes to your credit score. So we recommend that it's best to speak to your lender to get an accurate score that's based on your unique loan requirements. Once you have your score, you can look and see if there are any areas that need a little work. When you're looking at that score, you need to consider that there are several things that can affect the score. One of those is how much you owe. Lenders are going to look at how much credit is available to you. So that's the limits on your credit cards. Then they're going to see how much of that credit you're actually using. And you really want that to be below 30%. That's the magic number that they're looking for. Another thing they're going to look at is new lines of credit. So try not to open new lines of credit close to the time that you want to take out your mortgage, because that can actually hurt your score. So hold off on those if you can. Another thing a lender will look at is your length of credit. So basically how long you've had credit. Another category they look at is credit mix. So what is credit mix? Well, it's the type of credit you have. So for instance, revolving credit is credit cards. An installment loan are things you've agreed to pay back at a specific amount each month. So that's going to be something like a car loan. And another one a lot of people don't realize is that cell phone companies actually require credit for you to take out a contract. So that's part of your credit mix as well. Basically, a lender doesn't want to see just one type. They want to see a nice mix of credit. This tells them how you handle the different types. Then there's the big one, your payment history. Did you know your payment history actually accounts for 35% of what affects your credit score? We have said it before, we'll say it again. Pay your bills on time. It truly does matter. And if you don't, a lender may not take a chance on you. While you're looking at your credit score, see what's affecting it. If you have any liens or collections on there, you want to get those paid before you apply for your mortgage. Those things can really make a difference, not only in getting the loan, but in the interest rate on the loan. So make sure you take care of those. Also keep in mind, if you have issues and you need help, go speak with your bank or your credit union for guidance. Because the truth is, sometimes it's as simple as writing a letter to a creditor to clear up an issue. The key is take care of all of that before you apply. Now, you should have a good picture of what's going on with your credit. And if it's good, you want to keep it that way. Make your payments on time, maybe even early. Avoid new lines of credit. Basically, if you've got good credit, let's maintain that until you're ready to buy. Another thing a lender will look at besides your credit score is all your accounts. So this will include all your savings accounts and all your checking accounts. We'll talk about paperwork and what you need in another episode, but having your account information is all part of making sure your financial health is where it needs to be before you buy. So one thing you'll need to bring for your mortgage application is your bank statements. So before you apply, you want to have the down payment be in one of your accounts, and you want it to show on that statement that you're going to provide. So I would really try to have all that in order before you begin the application process if you can. Also, try to avoid any large deposits or withdrawals throughout this process. Basically, you want your account to look like it would on a normal day. Otherwise, it's difficult for the lender to assess what your finances really look like. So now as you get ready for the step of applying for your mortgage, we recommend you find a mortgage lender to work with. Find someone you can trust that will guide you through this whole process. You can start with your bank or your credit union. Also consider if you have people in your life that have gone through this already. Ask them who they trust or who they recommend. I know this process can be so confusing and overwhelming if you let it, but it really doesn't have to be. There are people ready to guide you through every step of this journey and help you buy your first home. So, are you ready? Let's get started. Thank you so much for joining us today. You've just watched our YouTube version of our Money Tips No One Told You podcast. There is also a blog version on our website at firstpioneers.com. You can always find us at any of our branches in Lafayette or New Iberia, Louisiana, on our website or on any of our socials. We're here to help you in any way that we can, and we really appreciate you watching. See you next time.